Hello fellow traders, this is Michael and I am back Sunday at about 7 o'clock. Forex markets are open and I just wanted to I have a couple videos in this series with regards to the dollar index. I have an article pending publishment on Seeking Alpha too, so it's definitely something that you want to keep an eye out for because it will go hand in hand with this article. About 80% on the fundamentals, prior week and a week ahead economic announcements, along with some support on a technical basis, looking at a couple um, indicators on the daily chart. But here I'm going to look at the monthly, weekly, and daily charts over a series of a couple videos to really get an understanding and grasp for what's going on with the dollar index. And it's very important to know this, as it's a weighted index that gives an absolute value, a weighted absolute value, more or less, the best absolute value of the dollar index weighted against the majors. And the major 8 currencies are basically the ones that have, for the most part, are quoted USD, and then have a base of euro, pound, yen, Swiss franc, and what have you. But this dollar index here, looking at the monthly chart, I wanted to show you that I went back and I drew some significant horizontal support and resistance levels. I have some Bollinger Bands, which has a 20 period intermediate Bollinger Band I like to put on, along with a 100 period longer term and a 55 period intermediate term moving average. I usually use these tools. I try to keep it basic. I don't indicator decorate, and it's never good to do that. You get analysis paralysis, but I always like to use an oscillator just to have it available. I don't necessarily use it a whole lot. I don't try to, because it could be misleading a lot of times, but I like to look for technical divergence and where we are relative to the overbought and oversold areas. We're heading towards neutral here, which sort of makes sense as we are consolidating up here on what I believe is a high level wave 4, and as we zoom down you'll see in my other videos where exactly we are on lower time frames. So if you look, I drew these significant horizontal support and resistance levels, and I let them feed down onto my other charts as they are significant levels that will affect you on every lower time frame. And as you can see, we have this very important trend line here. I drew it, but we managed to break through it about 8 months to a year ago, as you can see right here. And it's no coincidence that a lot of my other trend lines that I was drawing down here have a confluence right at that central area. There's never coincidences with these things. It's really the mechanics sort of converging at different areas, and you're just using a different tool to look at them. Whenever you use more than one tool, you'll notice that it gets the same job done, and you'll be amazed with sometimes how many indicators overlap, such as right here where this turning point was. You could see that this was a resistance this level right here. Basically, it's no coincidence that the trend line was exactly where it fell. I mean, you have everything sort of comes together. So basically what I wanted to look at over here on this monthly graph, if I zoom over, if I scroll over here and I zoom in a little bit, we basically have, and I spared you the details of the smaller interim waves. I already did the count, and for instance, I 1, 2, 3, 4, 5, A, B, C, and I basically did just the above the trees count to show you where we are in the structure. Obviously, the classic Elliott wave pattern is a 5, 3, 5 major waves, and then each 2 and 4 wave will be an ABC correction at the theoretical level, but a lot of times it will be a complex correction. It could be a zigzag, an expanding flat. There's all kinds of corrections that we could see. Like for instance, where we're at up here is in what I think is a wave 4, and so far it's been a wave 4 sideways triangle or symmetrical triangle, and you could see that the sell-off that we had, regardless of the reasoning, I believe that the sell-off on Friday was actually, usually the dollar won't sell off when the equities markets crash like they did. Whenever the equities markets have a big fallout like that, usually the dollar will rally just like gold rallied as a safe haven. Gold is a safe haven. The dollar's basically the global reserve currency. But what happened is I believe that all the individuals that a lot of the flows of dollar money that flowed into the U.S. was actually due to speculative entries, ahead of basically carry trades, ahead of the FOMC rate hike possibility. And I believe that the money that you saw leaving was due to a lot of subpar economic reports that indicated slow growth, slight misses on some CPI reports, housing data, housing starts, and also a couple other leading indicators weren't that great. They didn't indicate growth, so I'm thinking that a lot of the dollar longs pulled out, thinking that that might be an indication that rate hikes won't occur, and their carry trade became rendered insignificant. And otherwise, over the longer term, like I'll show you over these series of videos, I believe that the dollar is going to increase and take its place again as the reserve currency, and that was more or less a short-term happening. And as you can see right here, we are, I drew these couple of trend lines, and I wanted to show you that I always try to draw them, and they actually tend to hit other areas. For instance, let me see here. So this trend line basically connects the bottoms of these wicks, and it also connects the wicks from the top. And I always take them back sometimes just to see where we're at over here. You can see it sort of touch the top of these wicks too. It's no coincidence. The market remembers. But as far as these two here, you can see that the sell-off occurred, but it obeyed this bottom support for the most part. And we are converging towards what they call an apex here at the end, where they virtually connect. And this is basically, if we are in a wave 4, which I believe we are, we should basically see this apex. And obviously these are monthly candles, so this could have 2, 3, 4 more candles. I mean, it could take a whole month for this to happen. But honestly, we got one more month. We also got one more month to rate hikes. I believe they're going to hike rates, and it's actually being priced in. And we might have one more candle, and then in September, if the rate hikes occur, this makes sense as this is a continuation pattern in wave 5, which I believe will go up to, you can't see it on here, but wave 5 I believe is going to go to 105. I took the length of wave 1 and I added it to the assumed retracement of 94, which is a psychological support level, because a lot of times the wave 1 and wave 5 will be symmetric. That was my assumption. Sometimes there's what they call role reversal, but since we have an extended wave 3, I believe they're going to be close to symmetric. And if you add 94 and you add basically the length of wave 1, you get 105. Over time, I believe that's where it's going. My level is actually a more conservative level. I'm assuming just a double top or possibly a 101.5 level, which goes hand in hand with my other USD Canadian dollar articles that basically indicate possibly sideways action to more dropping on USD, followed by a breakout of a similar pattern, except it was a cup pattern on my other USD Canadian dollars. Obviously has the influence of simply the Canadian dollar versus the dollar index is weighed against a bunch of currencies. But it's a very similar structure, and I'm expecting a breakout. So follow my other videos, which will look at the lower time frames and get more tactical down to the daily. Thank you.